The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends. As always, for the most part, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we got going on? Well, it's been kind of a quiet day. Sold off a little at the open, tried to rally off 1 point on the S&P cash. The Dow's off 16. NASDAQ is up 3.5 points. And, of course, what we're looking at is the volume. Volume has picked up a little bit today. Over yesterday, we're about 200 million shares ahead. I suspect part of that is options and trying to go delta neutral on this day. See a lot more what happens on the close. But not much juice, pretty much a seller for every buyer, higher and lower. We'll have a lot of things to talk about, but pretty quiet day so far, and starting to see some stocks starting to roll over. We had some news in the Obamacare front. The IBB's a little bit down. Not sure if you can make a causal connection with that, but it is broken down through the last few days. So a little bit of movement in that one. For the rest, well, we'll talk about some earnings and some other stocks that had some decent moves today. We actually got a few. So we've got that to talk about. And we're going to talk about Facebook a little bit today. One of my favorite programs, just because it skewers those in need of skewering, is South Park. And Facebook got it both barrels last night. We'll talk about that. A lot of other stuff going on. So why don't we kick the show off with a little bit of history.
Then it's all just a little bit of history repeating.
And what do we have today for history? Well, back to it. On 1997, to those who bought records like Rocky Mountain High and Take Me Home Country Roads by the millions in the 1970s, John Denver was much more than a disc jockey. Great songwriter and performer with oversized glasses, bowl haircut, and down vest. He was an unlikely fashion icon. Of course, he plunged to his death into the sea in a airplane he was piloting. He just recently bought a home-built airplane, and I've worked on building these home-built airplanes before. In my flying club were a handful of people that actually wrote Flight Simulator that was eventually bought by Microsoft. And finally, Microsoft said they had to leave and moved them out to the West Coast. But I was actually helping one of the programmers build a Landcare, if anybody knows what that is. It was pretty fast, 230 mile an hour, very small plane, but very slick. I had worked on both the Connie and a B-25 and a B-17. Handing wrenches to those who actually knew what they were doing, and helping restore some of the old warbirds from World War II in the 80s. But what else can you say? Anyway, ground witnesses saw the airplane straight level flight about 350 to 500 feet over a residential area. They heard a reduction in the engine noise. The plane was seen to pitch slightly nose up. Then it banked sharply to the right and descended nose first into the ocean. He had bought this plane, didn't have much experience in it. They had basically put the fuel valve in this thing the wrong way. So he kept on trying to turn it and turn it and turn it. It was a bad spot, not easily where you could get a lot of torque on it. So he really just thought he wouldn't put enough pressure on it. basically he was going the wrong way. Engine ran out of gas. Instead of flying the plane, he started screwing with his valve to the point where he let the plane get out of control. One of the first things they tell you when you're learning to fly is keep flying the plane. You probably would have been fine if you flew the plane in the ocean, even at a slight angle. But nose first, not the way to go. And he had already had his license suspended, DWI the week before. And the guy was just kind of, as my dad used to say, when you're walking on eggs, don't hop. Well, he was doing the bunny hop. That was it, 1997. What else do you have going on here? Just again from yesterday, whenever you find yourself on the side of the majority, it's time to pause and reflect. And I think that's what the market is doing right now. Off 2 points in the S&P cash, basically flat on the NASDAQ and off 18 points on the Dow. The crude's off about 65 cents. So let's go ahead and start looking at some charts here today. How much time do I got left in this little segment here? What did I do with my clock? There it is. Oh, we got plenty of time. The first one I want to look at, because everybody was yelling about these payment processing stocks yesterday, was to look at the reaction for Mercado Libre, which is a payment stock for South America. This one absolutely getting a torch today. Looks like it's going to easily go down to the 232.17 low of August 10th. You've got 2.3 million shares already. That big low back in August 10th had 1.9 million shares. So you got plenty of juice for this thing to even come back and probably even break the 232 low out here. Again, we're talking about these patterns the last couple of days. How many of these stocks look really weak? Maybe the market does not go down, but I don't really see a lot of patterns that tell me that the market's going higher. Maybe there's always just one more share to hold this market up. But I don't think that it's going very much higher. This is another good example of shares of a stock. I may have pulled the trigger on this one if the volume was a little lighter back up here on the September 20th high. But the way this thing worked out was the August 2nd high, 293.86, 1.4 million shares. You came down with 1.9 million shares on that August 10th low. You came back up. And tested that 1.4 million share high with 1.1 million shares. I like a little less volume. What you did have out here, and not a surprise, is I have a 3 on my power law vector indicator number on the way down and a 2.4 on the way back up. Energy fell off a good 25% as you came back up, and that's kind of what you needed to know. There just wasn't the juice. Now, by September 7th, you should have seen all of the juice in the world. And you had one decent day out here with 1.3 million shares on the 11th of September. And this thing just went sideways and then started to roll over. But one good day does not make a market or a high. And that's basically what you got. You didn't have enough volume to break through that August 2nd high. Now you get the rollover. And that's it for this segment. We'll be back and talk a little bit about Fake Book, just because I had such a good time watching South Park last night.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You all brought Mark Zuckerberg into your lives, and now you want the police to shoot him.
Oh, boy. It's... You know, when the little dot from the sniper scope is pointed on you, you know you got to cringe, you got to stand there and take it. Well, they went after Zuckerberg for a lot of his kind of two-faced comments over the last few months. I was kind of interested to see how Facebook actually reacted. They had a lot of biting comments throughout the entire show about Facebook. And, here's the other one that I really loved.
No, you didn't read that on the news. You read that on Facebook.
Oh, boy. The kids were a little upset that there were a lot of things that were untrue said about them, and there was nothing they could do because Mr. Zuckerberg wouldn't allow them to. Anyway, of course, they're going to be in front of Congress on the 2nd of November. So we'll keep an eye on that. But, is this a horrible chart? The answer is no. Will the bad PR hurt them? Maybe a little bit. But this is kind of a cult with kind of a cult stock following out here. You're really going to have to do a lot to go after these guys. To me, the bigger thing is maybe it does become something that your grandpa used and not something that you will use, and people move into something different. And it happens fairly quickly in these kind of social networks. You hear today, gone tomorrow kind of thing, but no real effect other than light volume so far today. 7.1, and it's not uncommon to see these big stocks like Apple or Facebook. They'll defend, big houses will defend these stocks for a lot of time. So even with a little bad PR, not necessarily going to see all the kind. Now, this is one of these things where it's kind of cumulative. They get beat up a little bit more November 2nd in front of Congress, and then maybe beat up with something else. Good example of that is Equifax today, having to say that their website got hacked, and there was a bunch of other stuff on there. I mean, these guys certainly can't shoot straight, and that's kind of it. Same kind of thing with us that you have to look at. It's not generally a single thing. More, it's a death by 1,000 cuts, more like Chipotle. You'll get, a lot of bad press and bad press and bad press. And eventually, the big guys will just get tired of it. And they'll start selling the shares, and you'll see something like Chipotle go down. And then maybe somebody else will pick it up at a lower price. But the big guys that bought the stock, they probably won't be coming back and buying it a second time. It takes a while to get over that bad taste in your mouth. But kind of a good example there with Chipotle, where you lose the goodwill of the people that are following you. Facebook's never had that kind of great goodwill. It's had a lot of cult members, but you've really got to be into it. I just never understood why I've got to be talking about myself all day and posting pictures about myself, looking at pictures of people that went to school. It's bad enough when you see them on holidays, but man, is there nothing worse than having to sit through a slideshow of somebody else's vacation? No one wants to hear about it. Someone asked me about my trip sailing, and I don't think anybody wants to hear about that stuff either. Maybe it's just me. Maybe it's my Midwest upbringing. But the whole thought of look at me, look at me, look at me, it just rings hollow. Maybe that Midwestern upbringing that I had. Okay, so what else do we have? We'll look at some of the stocks out here reporting. Again, a lot of these stocks were priced for absolute perfection, and literally everything in the market is. I'm not going to say that there's not a handful of stocks that maybe have already been beaten up, but even those are probably have the rosiest pictures on them that you're going to see. I don't see anything different on what's going to come out tomorrow, and that's going to be the same thing. The whisper numbers on JP Morgan and Citigroup were sky high. These things would have had probably had double the beats to go out after these. Again, this last little move up off the lows in the financials, it's been okay. Would I have been short Citigroup? The answer is no. But, I just don't see a lot of reasons. There's a lot of low-hanging fruit that I think's out here where these stocks could give everything back that they've gone up on. Citigroup, probably not one of them. Down huge volume. I don't know if there's anything else you can say on 40 million shares already. Had a doji yesterday with 18 million. So you're coming down with volume. There's a gap that'll act as first support around 71 bucks. Were the numbers bad? No. The outlook, though, kind of bad on a lot of these. JP Morgan was actually up initially. They tried to push this and spin it. The whisper numbers were gigantic on this thing. And again, priced for absolute perfection. You've already, you went up since September 7th, front ran everything. My guess is that the real value of the stock today is somewhere around 95, and it'll take us a few more days to get down there and hit that. But that's it. Now, what's a DPZ? We talked a little bit about the impact of all the brouhaha going on in the NFL. Domino's pretty much hitting that. I mean, this was a fairly decent pattern to be short on going into earnings. I didn't know how really bad it was. I don't know if you can directly link a 10% drop of NFL viewing to a 10% drop in pizza sales. But if you watch any of that stuff, which I don't, but I do tend to have my eyes open when I'm in a bar or a restaurant and they've got the sports stuff on. What do they advertise? Beer, pizza, a handful of other things, guy things. And NFL's not been doing anything that would attract more viewers. I'll put it that way. And for the most part, half their audience, they're putting a thumb in the eye. So is it surprising that we wouldn't see more of this kind of dominoes action? I thought Buffalo BLD was more susceptible to having a bad hair day. This thing, of course, already broken down. Thought it was going to come back to this 95 area. Nothing but dojis for the last 5 days. But I don't think this one actually may have already gotten the worst of it out. If there's some kind of kumbaya on Sunday for the NFL, maybe this thing's found or close to finding a bottom. I'd like it to test $95, but not a bad looking chart out here so far. But you would want this thing to come and test that 95 level on light volume. Not much out here today. You may not get that test, but I think you kind of need it. Anyway, we will be back very shortly. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, put your message in the tin.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And a question about what McDonald's energy looks like. We'll zoom in here so you can see. Last move down from 160, 172 was a 3.6. The move up so far is a 2.9. You needed 4 million shares to break through the September 11th high. You had 3.6 million shares yesterday. So close, no cigar. Would I short it? No. Is this thing going to come back into the trading range? I suspect so. So, yeah, I don't think there's enough energy here for escape velocity. And certainly, you know, the high is 500,000 shares light. And if you really wanted to be non-conservative, the high at 159.98 with 9.5 million shares has never been exceeded. So you got a handful of things that even tell you that McDonald's out here could probably come back down to like 155 is my thought out here. Again, not much going on. All three red, S&P, Dow, and NASDAQ. Just off 2 points on the S&P today. Volume's picking up a little bit. Did want to bring one thing up, and that is someone has been telling me that everybody's shorting in the morning and covering in the afternoon. I've had somebody else tell me today that, well, they may not be shorting because I showed them the data. I said, they're not shorting. You can't. I mean, here's the historical levels in shorting, and very few people are short. Well, maybe everybody's buying puts or calls. Well, if you go to the CBO website, you can go back and get the last 15 years of put call data and see the levels. But here it is for yesterday. Basically, almost the exact same for what you're looking at. And, you know, it was basically 1-to-1 for yesterday's data. So it isn't like a lot of people are buying puts. It isn't like a lot of people are shorting at the beginning of the day and then covering. Maybe there's a handful, but it isn't like people piling on and the market goes up just a little higher. I mean, there have been times that has happened, but the last day of any significant downside protection buying and, of course, shorting in this market was January 6th. We've had a couple of bouts where there's been a little, but I mean a little by a little. Big day, I think back then was upwards of 20% of all the shares in the S&P 500 were shorted on January 6th. It has run somewhere around 8 or 9 to 11 almost since March without getting above 12. So there hadn't been anybody out here piling on in the shorts at any significant levels. We've seen that. We saw it last year. And yes, I agree that a lot of people that are short, if the market starts going up, they're going to be the weakest holders. But there is no data that I see to say that everybody is bearish or there are a lot of people bearish and the market's just going up on the wall of worry. Just the opposite. I see a market that hasn't had a significant bear thought since January 6th, almost the beginning of this year. So, again, I'm always more worried when there aren't a lot of shorts in a market pullback because guess what? If people start shorting on the way down, it's very tough to get them off the back of the market. And you can have some significant bear raids. But again, no real significant put-call ratio on the S&Ps or the NASDAQ. You know, occasionally we get a percent pop, but that's kind of almost in the area of the level of noise in this market. So there's nothing really too exciting about what's going on. Do have an email about the TLT real quick. So we'll look at that. Okay. Okay, I'm just looking here. Check my email real quick. Okay. So got a question about the TLT out here. I mean, you had significant energy come in off the September 7th high at 129.56. We've had a little of a bounce out here. Yesterday, 4.4 million shares. Today, 4.4 million shares already. So a little bit more volume, but you're going to need something like 12 million shares when you get to 125 on the TLT. So right now you're going up against a fairly significant gap down and with huge volume at about half the juice. I still suspect that this 122 is where this TLT is going to work itself down to. It may just take a little bit of time. So what else do we have out here? Wanted to look at the retail stocks again. We talked about them for a while. And of course, Dick's got hammered yesterday. Sporting good. And I guess there was some issues with the bankruptcy of one of its competitors that's making things even rougher. A lot of volume, still continuing volume on the way down today. But my bigger thought was, of course, these folks that were looking at the, XRT? Is that what it is? The retail? It is XRT, isn't it? Continuation, we talked about this one getting hammered yesterday. Now, if you are talking about people actually shorting, you did have that in the XRT yesterday. I get the data later at night, and actually I have to do a lot of processing. I wrote some extensive software to put together lots of different files to get the short volume every day for everything that I can get my hands on, everything that FINRA provides the data for. And you did have a fairly decent short move in these retail ETFs. It is, who knows what we're going to get today, but certainly you had the real kind of first hint out here that people were shorting on the way down yesterday in the XRT. You had one day where they did kind of short, and that was back on the 26th of September. But I made these charts for that reason alone, so it will kind of stand out to me. I kind of call these things matchsticks. If you look down at the bottom for the volume ones, the black is the amount of shares shorted, or the percentage of shorts that day. So you can see, in fact, I can zoom in on them. So you can kind of see that I can pretty much tell when I look at a chart whether or not a lot of people were climbing on the backs. Now, that volume that FINRA reports is not what people went home with each day, i.e. they shorted and took it to the close. But at one point it was shorted. Now, again, some of that is market maker business to keep the market moving. But that's, you can kind of say that there's going to be an average level of that almost every day based on volume. So that percentage won't change a lot. When you see big changes like that, like in the XRT, those are some people throwing some big money at something like that ETF. They're betting on a retest of the 37.72 of August 21st.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And a question about Tesla. Is this thing ready to pull the trigger? As I said, I'm kind of looking for that 365, so maybe tomorrow. This thing looks like it might be set up. Nice light volume. Along with this, Tom asks basically, I guess I went on a rant last week about people going to Mars and that we have a lot of answers, questions to answer before we even think about going to Mars. Question is, how much radiation would an astronaut actually get? And they sent 2 probes with, of course, the rovers to Mars. So we have 2 different missions to average out and back. But what they found out was that on any given day, you were getting 100 times more radiation than you would standing on the ground here in the United States, to 1,000 times more radiation than you would get standing on the ground here. And that the trip one way would give you 30 times more radiation than they would allow you to get and still work at a nuclear power facility. So you're 30 times over the limit just on the trip there. Of course, we didn't make any trips back, but we can probably say that you'd get the same amount. So, and let's say that you were totally covered for the time that you were on Mars, which would probably be about 6 months. But that probably is not the case. On the way back, then, of course, you get an equal dose. So you just a round trip would give you 60 times what they will allow you to work in a nuclear power station for. So it is, this and a handful of other problems are huge. 6 months in space normally gives you, or in no gravity, will see that your muscle mass drops 50%. So if you're a pretty husky guy, the saying around NASA is that 6 months in space will take a 20-year-old and turn him into a 60-year-old. So to give you just an idea. So there's a lot of stuff. They got to take care of gravity and all the stuff. And it's just the over promise and the waving of hands that makes me think that why it makes interesting press. The reality normally comes back to bite you when you own a company and make wild prognostications that you cannot back up. Eventually, the market will really start to come and fear you. And I still think this is the the iOmega. You'll have to look that stock up, of 2017 and 2018. But the question is just timing it right. I think you get one more little bounce out here. Again, when you look at these, this is something I want to show because I brought it up before out here, and we're talking about shorts today. It's not uncommon to see everybody short just before the thing starts moving back up, and that's exactly what you got. In fact, I'll zoom in a little closer here so everybody can see. Fairly decent shorting, of course, on that 331.28, and that's not uncommon. You get a lot of people that love to short at the bottoms and cover at the highs. And of course, you make money just the other way if you were going to go short. This one's up a little bit. You know, this thing, and this is, since we really haven't had a bear market come along, if we do, which I think there's a possibility, you want to start looking for this kind of pattern where we went short on this in the Tech Insider. That's the June 23rd high. You had almost 13 million shares. You went through it on September 18th with 7 million shares. So this wasn't even close. The energy, well, like we pointed out yesterday throughout the show, you had an 8.4 on the way down, a 5.4 on the way up. And this is the only way I can short highly shorted stocks. You got to have a signal that's just very perfect. And of course, we did, and I think covered it. I think we were short at, or I was short at 386 and covered at 338. So a little bit on both sides, but pretty good trade. But again, when you came down here, the energy was not all that exciting. This thing did hit the gap. It started to bounce. My guess is this is going to make it a little ABC and set up to go back down to 290. The question is just when does that timing work out? Give me a call at 877-927-6648. Oh, I love the comedians in the den is what they are. So we're off 2.5 points on the S&P cash, off 25 on the Dow. So we'll keep an eye on this. But I'm looking at some stocks out here that look like they've traded maybe 3-4 times to go higher. In fact, let's take a look at the IBB. This thing looks like the slow roll has already started on this one up here at the highs. It never broke out above previous highs. It got into resistance, slowly starting to move over. Not a lot of juice in this one. But again, this is one of these ones where you might be short for a long time, and then one day the trap door opens up. But my guess is this could easily get back in a couple of days, back down below 300. So what else do we have out here? We looked at Tesla, looked at that. See what else stocks out here. Question to look at, we talked about Priceline, and I was looking at the same thing, that maybe you get kind of just one day spike. This may be it on Priceline though. I got a sneeze. Okay, that was a 6 sneezer. And they proved that's genetic, by the way. So what do we have on Priceline? This thing came down with huge juice on the 9th. It's come back up, tried to fill it a little bit. No real volume on it. But again, there's almost nobody down here that won't buy anything that goes lower in these markets. It's become a cult following. And, yeah. What else can you say? I really just thought that maybe 1965, maybe the thing gets up there and does a reversal on no volume too. So just kind of hold your powder dry on a few of these up here. Also talked about a stock yesterday that was down for all of about 5 minutes in the morning. And it is now starting to roll over. But this, a lot of people say I don't want to look at the news. I'm not so interested in the minutia in the report unless there's, you know, something I can put together that says, hey, these things are going to blow up. But when you know, the thing was down like $1.50 early in the morning yesterday. I saw 6 articles about how you must buy the dip that morning. You can't let a dollar go by. And of course, being the absolute reverse of what everybody else does, I say that is a fairly big signal. By the end of the day, I saw already 9 articles about how you should have bought the dip first thing in Micron in the morning. To me, pretty good signal that things are getting ready to turn south. When everybody in the world is on your side, it is time to pause and reflect.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
And as we get to the end of the day, we're off 4.5 points on the S&P cash. Dow's off 30. As I said, it's just, I hear a lot of stuff, but it doesn't seem like it's backed up by the data. To me, the bigger answer is that we've been in a bubble for a little while. When I look at my models, they show that basically about 10, 12 days ago, we took off, and the internals that I look at, which are about 25 different things, never ever matched up with a move higher. You can see that in the volume every day. You can see that in the dollars spent in the marketplace. We'd have big moves, and there just wasn't any juice behind them. 240 billion shares yesterday in the push higher, even with the end of the day. We need something like in the neighborhood of $350 billion traded in a day, maybe $400 billion. If you don't want to look at share volume, just want to look at the juice going through the market. It hasn't been that exciting. And if you just go back a year ago and look in the September and October timeframes, the volumes are hideous. So I don't get the whole idea where, there's not a lot that have changed out here. I understand that being short through options expiration is mostly an issue, but I'm heavily weighted into things that will probably do pretty well. And there's always that time when options don't go the way that everybody wants. That's generally about 2 times a year. And if you go up on average 15 points into expiration every year, when it does go down, the average is more like 40 or 50. So it will even out some level. But when you do go down, you do tend to go down a great deal more. As I said, put call ratios the same. Shorting, pretty minor. There's not a lot to hold us if this market does turn south. So just always think about using options. They're extremely cheap now. Having a stop in if you are trading equities. And you always have the opportunity to sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.